Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Harridge.
Welcome back to Uncontested Investing. I'm Tim Harridge. Thank you so much for stopping back by. Today, I'm here with another Texas guy, Travis Baucom. Travis, thanks for driving up.
Yeah, no problem. I'm super excited.
So, just take a minute. You're from Waco. Would you live in Waco? Am I saying that right?
Yes, I live in Waco. I've lived there for the last 10 years. It's our home. You have 4 kiddos, a wife.
So why don't you tell the audience just a little bit about you and your business and what you're up to these days?
Yeah, we are primarily a self-storage syndicator, meaning that we find very large deals. We raise money for those deals. We take on the financing for the deals. We close those deals, and we reposition them and sell them 3 to 5 years after we purchase them.
And how long have you been doing self-storage?
Been doing self-storage for 18 months. I've been doing real estate investing for over 10 years. Started like most people in the house buying business and just completely got burned out. Had a few other unlucky breaks and decided to move on to something that had a little bit more predictable cash flow, like self-storage.
All right, so I'm not going to get ahead of myself, but I've got a lot of questions about that. The first segment every week is the bottom line up front. So what I do is I ask every guest, take up to 2 minutes and just talk to the audience. Imagine they're going to pull over and get gas and forget to turn the thing back on. Let's give them the most important thing that you see in today's real estate market, things that you think people should be doing, maybe things you think they should be avoiding, and really just kind of, let's hit them with the bottom line. You good to go?
Yes, sir.
Go.
Yeah, I think in today's real estate market, everyone needs to be a lot more conservative than they have been for the last 14 years. We've had a on-ramp and a very nice economy that just continued to go up. That is no longer happening. We have interest rate environment that is unprecedented, and we have inflation that's also unprecedented. So when you look at deals, you need to be underwriting them a lot more conservatively than the other ones, or than you have in the past. And also, what we have done is just completely remove the speculative nature of house flipping or speculative natures of real estate investing, and have gone to having 3 to 5 year projects. And that's been the best transformative thing for my business.
All right, so that's great. You use words like underwriting. Let's dive into that a little bit, because I'm a multifamily investor and you've sent me some deals. And if I ever do take the time to read them, I know I'm going to invest with you. But what are some of the underwriting issues that maybe you're focusing on differently today than you were 12 months ago?
Yeah, well, we're looking at differently today in the commercial space. We're suppressing the cap rates. So if we get it sold at a 5.5 or 6 cap, our exit cap now is an 8 to 9 cap, which drastically reduces the value of the property. So that means that drastically reduces the amount of opportunities we have. But we do know the opportunities that we're getting, we are safely getting into those, and we're going to, no matter what happens to the economy, we should be able to exit those assets and also, reach our yield or reach our return that we're trying to get to our limited partners or our limited investors.
So for the listener that may not understand a cap rate, in essence, you're saying if I'm buying at this profit number, I expect to have to sell it where someone else can make more profit than I was planning on. And so you're being conservative. Your sales price in single family terms, you're using the low comp for your sales price, not the high comp for your sales price.
Totally. In the single family space, that's exactly
right
what we would be doing. In the commercial space, essentially, we're just assuming that a few years from now, people are not going to pay as much as they have been paying for a commercial asset or a commercial piece of real estate.
What has that transition been from? I'll never forget when I started B2R Finance with Blackstone, I spent half my time explaining stuff to them, and the other half of my time was them explaining stuff to me, because these were commercial mortgage-backed securities type loans for residential properties. They're like, SFR. I was like, yeah, single-family residential. They're like, no, single-family rental. I'm like, no, that's not what it means. Like, it's never meant that. And they're like, no, that's what it means now. And I just remember they're like, the DSCR. And I was like, no, I don't. Like, what are you talking about? I've done thousands of houses, and I have no idea this is what you're talking about. How has that been vernacular? And I would imagine you went from doing multiple deals per month to like a deal a quarter type. Can you talk a little bit about that evolution for you as an investor?
The evolution from going from single family to commercial?
Yeah.
Yeah.
From vernacular to activity to learning curve, just all of it.
Yeah, absolutely. I would say when we were single family house buyers, we had 5 full-time staff and 4 virtual assistants, and that was a very expensive operation, and we had to buy anywhere from 8 to 10 houses a month to make payroll and make pay our investors, pay our loans, pay our rent, and that sort of thing. With the self-storage business, it's an incredibly top-line business. So you can have 1, 2 people. You can contract other people. So if attorneys, property managers, maintenance guys, all that can be contracted out, so it's not on your payroll, and it provides a very, very free lifestyle. It's really nice. Instead of buying 8 to 10 houses a year, our goal is to buy 1 a quarter, like you mentioned. So 4 houses or 4 properties a year. This year, our goal is about $40 million worth of storage facilities, and that should double our portfolio currently from what we have last year. So,
what about the vernacular? I mean, because like getting a loan on a $10 million self-storage facility with value-add characteristics is a little bit different than financing a fix and flip loan on the house on 5th Street, right?
Yeah, definitely. Terms like balance sheet, guarantor, debt service to coverage ratio, or DSCR, which you mentioned before, all those come to mind. Typically on a house, when me and you are buying houses, we're not buying houses with an option period most of the time. We're just buying it as is with a guaranteed sell. But in a commercial asset environment, we're buying, there's a feasibility period that it's normally 45 days, sometimes even longer than that, depending on what some of the reports you have to get. And then after that, it's a 30 to 45 day close. So you can get a property you get in a contract right now, it could be 90 days before you close.
And so with that, how are you finding it's a lot of work to get into something that you may not even go through with 45 days later? And then if you're planning to do 40 million and you get 2 months behind, how are you managing that pipeline? Because like you said, in single family, it's like you need to get this many leads and this many appointments and then this many contracts, this many closings. Like your pipeline's a lot different. How have you, as a business owner, as an entrepreneur, made that shift?
Yeah, from a pipeline perspective, the great thing is storage pays so well cash flow wise. Like we don't have to buy a property this year just to continue our lifestyle. As far as pipeline, we've networked with every self-storage broker in the Southeast. So pretty much I know all of them from Texas all the way to Florida. That's our kind of buy box. We're going to buy in the SEC territories.
Now, wait, I got to stop you. Is that a damn Aggie ring?
It is an Aggie ring.
All right, so now you're talking about the SEC territories because you guys had to leave the Big 12 tired of getting stomped by the Longhorns. Now I'm just kidding. Yeah. Now we're following you to the SEC. So now Texas to Florida is the SEC territory. Oh my gosh. Okay, that makes a lot of sense. Anyway, go ahead. SEC
we
territory.
Can continue about how terrible Texas A&M football is, but it's probably a different podcast.
The Longhorns.
Right.
No, pretty miserable themselves. Yeah, what they lose to Toledo or something the other day? It's just
who knows. What's the question?
You said you know pretty much every broker from Texas in the SEC territory.
Yeah, it's a pretty small market. So single-family homes. How many agents are in the DFW area alone?
Hundreds of thousands.
Self-storage brokers, there's probably 3 in DFW that I know.
Really?
Yeah. It's just not a big asset class. It's a really small niche market. The people that like self-storage. The people that don't. And it's also the most unglamorous asset class that's out there. It's concrete and metal. And you get rents from the first to the fifth, and then you don't really have to do much after that. Except maybe clean out a unit or 2.
So we're going to take a break, and when we come back, I want to talk about how you broke into that niche and how you fund a business like that, and just all the different little nuances into kind of how you've continued that transition. So we'll do that right after the break. Stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm Tim Harridge. I'm here with Travis Baucom. And Travis, you were just talking about it being more of a niche business, self-storage versus single family. The first thing that the skeptic in my mind, which isn't there a lot, but it's there every now and then, is like, well, is that sustainable? Is there enough of it to go around? How do you build a big business off of that? How has it, I would like to know a little bit more about the market size and what you see. And then I would like to know how you've tried to make a name for yourself kind of in a new niche business.
Sure. Should I answer that first question? It wasn't really a question but 78% of the storage facilities out there are still owned by a mom and pop owner. Similar to multifamily in 2012, it was like 80%, and now it's 8%. So it's basically this whole market cycle. Multifamily is now a corporate-owned entity as opposed to owned by mom and pops. But storage, there's still plenty of opportunity. So over 3,000 facilities in America, 80% of those, or 70% of those are owned by mom and pop. Out of the ones that aren't, 80% of those are owned by the 6 companies that are publicly traded on Wall Street. So there's plenty of opportunity there. Can you help me on the
And then, so you're going out to all these brokers.
Yeah.
There's 3 in DFW. It's a niche business. You're a house guy.
Right.
How did you break into a new niche business that's so small with regards to the number of players?
Yeah, it wasn't my first choice. I was just like most other house flippers trying to get into multifamily. That's tend to be the Michael Block or the Lifestyles Unlimited way of getting to, legacy wealth, if you will. The way I did it is after was part of a franchise, bought a lot of properties of the franchise, and left the franchise, continued to buy properties. And I got to a point where I was so burned out, I didn't want to smell a foreclosure. I didn't want to talk to an old lady. I didn't want to see a wholesale email come through. I was like, I got to find another way to make money. And that's when I found a buddy who's up in Illinois, and he was buying storage facilities, similar trajectory. House guy, got completely burned out, started buying storage facilities. After looking at the time, before the 2020 pandemic building material explosion, you could build a brand new storage facility for $35 to $40 a square foot. And I was building, houses for $100. And I was like, this is what's going on here. So after discussing with him, he opened my mind to several things, such as self-storage has the highest return of any asset class over the last 40 years, which that return, according to the National Association of Real Estate Investment Trust. So that's 17.43. Multifamily is right underneath that at like 16 and some change. Furthermore, some of the things I like about the storage industry and that made me want to get there is most of our rentals, our single family rentals, were Class C crap. And getting a tenant after they decide not to pay, getting them out of there and then having to spend 20, 30 grand to fix it up just to rent it out for $600, $700 was just horrible. And so storage, you can actually, it's non-judicial foreclosure. They don't pay you by the 5th, you post by the 16th, you post again on the 23rd, and then you schedule an auction and you get their stuff out of there. So that was about not having to deal with humans that much and just dealing with their crap was really exciting for me.
So I'm going to talk about being burned out in a minute because I feel your pain. But you call that first broker, you're like, I'm a house guy. how did you build credibility and get them to actually deal with you?
My script was, hey, I just sold we had 72 rentals. I just sold 72 rentals. I'm going to get in the self-storage industry. Can you help me? And they're all real laid-back dudes, and all of them were like, yeah, sure, what do you, and I would call about a specific property. I knew the commercial lingo because we own a couple of small apartments that we had bought just kind of happenstance to the house buying business, and I knew how to talk to them. I knew how to structure it. I was saying, hey, how do you finance these things? How do you, is the seller going to offer any financing? I heard that's a big thing in self-storage business. I basically took things, I live in Waco. I basically either called the brokers or the listings or just called the facilities within about a 45-minute to an hour range to my house or my market and just started asking questions.
That's amazing. And it's amazing because it's a transfer of experience, right? Because ultimately, same way you buy houses, right? And when you think about it, the first-time home buyer calls the realtor and says, please help me. Yep. And so in essence, the first-time self-storage buyer just called the realtor like, can you help me? Like, right. I've got the money. And so now here we are. You clearly are past that initial phase. How hard has it been to continue to finance this acquisition strategy?
Still pretty good. It's just like most things, we were getting 80-20 loans. So 80% the bank would cover, 20% we would have to come with equity, either our own equity or limited partner equity. That's gone to 75-25. The biggest issue is every single storage facility I bought, the seller has come in overalls and was at least in the 70s. They still want the 5 cap or the 6 cap evaluation, and we're borrowing money at 7.5 to 8%. We can't hit that. So that's been the biggest hurdle to get over. So a lot of our letter of intents have been a little bit of seller finance or a lot of bit of seller finance or a seller second with the first lien. The sellers really aren't as desperate as they need to be for us to buy as fast as we want to buy right now. But that's essentially how we've pivoted on our offers. But yeah, it's got a little bit more difficult to buy just because they want a 6 cap and we're buying at a 7.5 cap, and that means we have negative amortization on the first day we own it.
So I always joke around and just say, well, you can't have cap rates lower than interest rates, right? I mean, it's just kind of a function of math,
right?
I find it interesting you got into the commercial lingo via some small multifamily. Were those like 10-unit, 12-unit type buildings, or can you talk a little bit about that?
My fifth ever real estate purchase was a 20-unit apartment complex that had 3 tenants in there. Yes.
So that 17 vacant.
17 vacant, and I thought I was I thought I got the best deal ever. And
you're smiling, so there's some lumps coming in out of the story.
Oh man, it was rough. There's a reason why only 3 people were living it. We spent like $200,000 fixing it up. We're like, we're great. We're gonna get some good Baylor students. No, Baylor students don't want to live there. No one wanted to live there. Still, no one wants to live there. I don't own it anymore. I sold to a guy, but I basically bought it for $6,500 a door, which just everyone would think I'm awesome for doing that. But then I was in it totally. I was in it for $20,000. And I was checking on it. The worst thing that happened to me is I was checking on a vacant unit. It's supposed to be empty. I open the door. Dude's getting high, has a gun in his lap. I startled him. He stands up and the gun falls out of his lap. And I go, hey, don't worry about it. I closed the door, got in my car, and I called the banker. I go, you got to find someone to buy this because I'm done. I'm like, I'm not getting shot.
Yeah.
This is after like 14 months of owning it and having to show up with the cops 2 to 3 times a day, multiple days a week. Like, I think my cash flow was like $800 a month, and I was a realtor at the time, and I was trying to I'm like I can make like $3,000 just selling a $100,000 house, and here I am dinking around with this horrible experience. And so thankfully a mutual friend of ours ended up buying it, and I think he still is struggling with it, but he's he has the bandwidth to do that.
Are you still friends?
Yeah, he's a good mentor of mine. It actually ended up being a really good. We've ended up that he's a good mentor. So,
well, you said mutual friend, so I didn't know like if he's still struggling with it.
I just didn't know if I could say his name.
Yeah,
Hudson Henley.
Oh, Hudson Baucom.
Yeah.
Oh yeah. Well, he's an attorney and he likes problems. Hudson, I think he enjoys problems. That's funny. And he owns some really cool buildings.
Yes.
So you end up with that multifamily property. You end up with 70-something rental properties. You go to your wife and say, honey, we're out of this single family thing. I don't know where we're going to get money, but we're going to do this self-storage thing. Was that the conversation?
Man, I wish it was that easy. It was really, so in 2018, we bought 91 houses, and that's a big number, and it takes a lot of cash, and it took a little bit more cash than I had. And so we ended up kind of running out of money, and we're like, okay, well, the only way I'm going to get out of this is if I fire all my staff and go back home and just start trying to sell everything. So I had 42 renovations going, rehabs going, and just hit it one by one, started knocking things out, and it took over 2 years to get out. And I'm like, I'm never buying another house after that experience. So my wife was really excited that there was something we could do that after doing a little bit of work, there's still cash flow coming in every month and we can live on that money.
You know, I sit up here in these chairs weekly and talk to people about all of their successes. And sometimes we don't talk enough about the struggles that they had to overcome. And as a father of 2 boys, I'm always talking about the journey, not the destination. Because I think so often we have this idealistic picture of our destination in our mind, and we don't realize, say my kids, they want to be where I'm at. They don't necessarily want to go through what I've gone through, right?
Right, totally.
Like, they don't want to join the Marine Corps. They don't want to know what it's like to be out of gas and your cell phone's cut off because you don't have money, right? Yeah, right? They don't want to know what it's like to owe 10 times more money than you have in your bank account, right? Like, it's, and I've been, now, hindsight's always the greatest teacher. At this point in the cycle, I've been fortunate to go to masterminds in 2022 and meet some of these young entrepreneurs that only knew 2019, 2020, and 2021, right? And then they get to 22, and all of a sudden, it gets real. But that advice is the same. What you did is the same advice I give everyone. It's like, stop, right? It's really first aid, right? It's triage. Stop the bleeding, protect the wound, treat for shock, right? And there's so much, like the bleeding is the cash you're losing, right?
Right.
The wound is whatever is making that bleed. It may be your employees, it may be your business model, it may be the way you manage the business model, right? Because certain personalities will do great with certain businesses. I hate single family houses. I mean, I still buy them. I'm not as disciplined as you. I still buy them, but we've gotten to where we only buy $600 to $1 million houses. And we are only after one cash flow strategy, period, right? It's not, we're not doing the, so most I ever flipped in 1 year was 143 houses.
Wow.
Yeah, and it wasn't wholesales. It was buy them, close them, fix them, market them on FHA, have your 95 salespeople running around doing open houses. It was cash intense. Months where you bring in $1 million less than you, months where you spend $1 million more than you bring in. Right. So I'm with you, brother. I know that feeling. And so you ended up with self-storage. The cash flow is great. Talk a little bit about the way you raise capital to fund these, and I've seen some of your pitch decks and your general philosophy on how you treat investors.
Yeah, the way we primarily raise money is just through friends and family. There's 2 distinctions with the Securities Exchange Commission, 506B, 506C. 506B is you can only talk to your best friends. 506C is people can see it out there in the internet. How I remember.
Works perfect.
And so one of them, there's various things that you have to collect on both of those, but I essentially come up with a video. I want that video to be at least less than 8 minutes long because people's time span, attention span isn't going to be much longer than that. And then I provide supplemental marketing materials like this is your return. This is when you should get your money back. Here's a pro forma. And then I text everybody I know. I text you, I text guys like Cambright. And I basically say, hey, if you're interested, let me know. I'll email you the video. Yeah. And so because I'm just basically, I don't want to bother you and send you, if I just send you an email, you're never going to get it.
Right.
But if I text you, you're going to be, 98% of text messages are read. So if you don't respond, that means I'm assuming you're not interested or got busy or something like that. But yeah, it's just, I send text. I don't know if this is a perfect strategy, but I send text that comes with a video. And then if they're interested, they can go to a website and soft commit, which is basically saying, hey, I'm good for 100, I'm good for 250. And then we send that to the attorney and they write the docs and then they wire the money.
How important is investor communication to you in the operation of these transactions?
Yeah, it's very important. If an investor calls me, I want to pick up. They hear from us once a month. We send an email with a cash flow statement with a brief update. Again, we don't want you to spend more than a few minutes.
Brevity is key.
Looking after your investments. And then if you have any questions, just give me a call.
Because like for me, when I get my statements, the first thing I do is I look at the distribution amount. And then I look at what it was the month before. And if we're relatively close, I typically close the PDF and move on about my day. If it's, $2,000 and it was $5,000 the month before, I may want to keep reading,
Explaining it, dude.
Yeah, well, when that's the the summary, right? Like we paid property taxes or whatever the case is, right? I mean, communication and having a good strategy is important. What about repeat investors? Do you find you get a lot of those?
I would say that most of our investors are repeat investors at least twice, and then they kind of have their money tied up so, until I can refinance and get it back to them. And so we have one guy that's in 3 deals of ours out of 5, and I think his money's just tied up until we can get it back to him. So yeah, we love repeat investors because it's kind of like a you're doing something right because they believe in you that they're going to do it again.
That's right. All right, so we're going to take a break. We're going to come back. We're going to do the Money Minute, and then I have a list of questions I need to ask you during rapid fire.
Okay.
All right? Stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-vest.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Harris. I'm still here with Travis Baucom. Travis, it's time for the Money Minute. Imagine there's an entrepreneur out there, maybe someone that just bought that 20-unit building you bought, or maybe it's someone that is thinking about making that switch from single family to multifamily or multifamily to self-storage or to commercial, or maybe they're just getting started. Think about if they only got 60 seconds of advice this month, what it would be, the best 60 seconds of your experience boiled down into actionable advice. You ready? Go.
Yeah, I would say a couple things. One, numbers don't lie. Just stick to your numbers. 2, do not let your ego get in the way. Pretty much every time I lost money, it's because my ego got in the way. And I would say, in addition to that, take action. Take action and get feedback. There's negative feedback and there's positive feedback. There's not failure and successes. You can get just take action, and when you get feedback, you'll know exactly where you need to pivot next.
So in a time like now, many people are lying to themselves every day, and they're using old numbers to do it.
Yep.
And so I love that advice. Numbers don't lie. When I'm talking to a customer, we get a lot of people right now that are bringing us their failed flips, trying to refi them.
Ouch.
And my advice is always, look, it's worth 400. It's like, well, it looks like you've been trying to sell it for 375 for the last 3 months, and it's not selling for 375. So why is it worth 400 again? Well, that's what it was when I bought it. Yeah. I mean, you need to rerun comps, and you need to look at the numbers with maybe a fresh set of eyes. And then the other part of your advice, actually both parts, don't be egotistical about it. Accept that the market moved against you and take action. Because ultimately, when I look back at my biggest losses, I agree with you. It was when I was unwilling to accept I had screwed up.
Yep.
It was almost every time.
And real estate investors notoriously fall in love with their own legend, meaning like they think they're doing so well that they get blinded. I would say in 2018, 91 houses, I felt pretty good about myself, but then I lost everything, or not everything. I had to unwind a whole bunch, and there was a lot of things that were not my fault, but everything was my responsibility. And I feel like right now, if you're being really aggressive on the house flipping side, you're either way smarter than everybody else I know, or you're gonna get your butt handed to you.
Well, that's a great quote. Not my fault, but my responsibility. And one of my great mentors, it was in 2018. A lot of things did move against a lot of us that were flipping too much or got too exposed overhead wise. And I had I'd shut down the real estate brokerage, sold the property management company, sold the lending company, was going to keep the insurance company. But now I had this, 11,000 square foot space that I didn't need. And I was negotiating with the building to get out of the lease, and I did not like the terms. I felt like they were winning. And a guy that was on my board at the time looked at me across the table and goes, Tim, sometimes a good deal is getting out of a bad deal. Yep. And I just I remember Richard saying that all the time, and it's so true. Right? Like sometimes you just have to understand the good deal is just getting out of the bad.
Yeah, man. It's like when you write a check to get out of a really crappy property. You're like, that felt so good. I don't ever want to do it again. But I'm
signing the check is horrible.
Yes.
Disconnecting the utilities and canceling the insurance is wonderful. It's like good riddance and goodbye.
It's like I won't ever make that mistake again.
So now you have all this free time. What do you spend your time doing?
Love the mountain bike. I try to mountain bike on Mondays and Fridays, like go somewhere, not just stick around Waco. I have 4 kids, and that takes up a decent amount of time. And then my wife started a school, and I bought 34 acres for her outside of Waco in Lorena, and it's a school that's based on it's core curriculum, but there's a lot of Montessori emphasis, a lot of Waldorf emphasis, but like they focus on like business econ, emotional awareness, project-based learning, STEM education. It's a really great place, and so I help her a little bit with that, not a lot, but that's when I say I have a lot of free time. I mean, like I feel like house flippers can never take vacations because they're like, I got to find the next deal. Whereas I can go and we just got back from 10 days in Tahoe with my family for Christmas. Like I would never be able to do that back when I was flipping houses, but I can do that now because I know I got 1,500 tenants that are going to pay next month.
And when was the last time you talked to Home Depot?
Home Depot?
Yeah.
Oh man, it's been so long since I've been to Home Depot. Oh yeah, I had like one of their special like regional accounts that you had to like talk to the executive. Man, I cannot remember. I haven't thought about that. It's been October of 2021 was my last house, and maybe actually October 2020 was my last house to get done with, and I still own it. I just made it a rental.
So I joke around like, for some reason, the text to confirm for my Home Depot account still goes to my cell phone. Now, mind you, we don't do a whole lot anymore. It's, little fix up stuff or things at the Airbnbs that my wife's got going. But every couple of weeks, I'm like, why does this still go to me? It'll be a great day when Home Depot, we love you. Thank you for your partnership. But when I don't have to talk to them anymore, it'd be a great day.
Oh, man. Lowe's, Home Depot, there's just a smell that you're like, I don't want to be.
I like to go there for fun.
Yeah.
Like, I do like shopping.
Sure.
Like, if I won that $1 billion Powerball, there'd be a large portion of it that went to Home Depot just to buy new stuff. Yeah. Probably not even stuff I need, just, the new one.
About my barbecue grill, I was talking to you. I remember texting you, like, hey, I don't have time to do steaks. I think we're good. And you, recommended one. So
yeah.
That's where I went and bought my barbecue grill.
I ordered one for one of our Airbnbs last week off the Home Depot app, which they give a military discount now, which is great. So I'm getting along in the tooth. I want to ask if there's someone out there that is the frustrated flipper, we'll call them. What advice or resources would you point them towards to get into self-storage or multifamily?
Yeah, I would say that life is going to be a lot easier when you get out of the transactional business of buying houses. I recommend going to House to Empire. It's a program we have. HouseToEmpire.com. It's a program we have that we basically will teach you how to go from a house flipper to buy commercial assets, and then we partner with you on those assets. So you get to use my balance sheet, you get to use my property management company, you get to use my skill set in order to go from buying $200,000, $300,000, $400,000 houses to buying $3 to $9 million storage facilities or multifamily properties.
Oh, okay. So HouseToEmpire.com.
Yeah.
Okay. And then if there's someone out there thinking, I don't really want to learn how to do it, I would just rather you do it for me. How do they get on your text message list?
Yeah. I'm actually hired a marketing company. He told me not to do the text message anymore.
Oh, really?
Hey, I'm like, okay, well, you're gonna have to give me an alternative, or other.
You need to keep texting people like me and Mike. Just say that.
Right. I thought it was a good. It's funny you bring that up, but yeah. So that would be our private equity side. It would be BaucomieCapital.com. It's BALCOMIE Capital.com. And down at the bottom of that first page, there's a form you can fill out, and you'll start getting all of our deals that we send out.
Very cool. Well, we're almost out of time. Do you have any parting thoughts, parting shots, anything to wrap up with?
Yeah, sure. I think generally this whole industry focuses on the residential side way too much, and the commercial side is kind of aloof. It's only for those big boys. And I think in reality, like if you just said, hey, in 2018, Travis, if you were told 2018 Travis that in 2023 he'd have $30 million worth of commercial real estate, I'd be like, yeah, right. There's no way in heck that's going to happen. And it's a lot easier to get to that point than I thought it would be. And I would just say, if you're a frustrated house flipper, or you're just maybe even non-frustrated house flipper, but someone that wants to diversify commercial real estate, then just it's easier. Just do it. Just go out and do it.
And if people want to get in touch with you, HouseToEmpire.com. I'm not going to try to spell Baucomie Capital.
Yeah.
Any other social media?
Yeah. If you want to
website,
reach out, ask me questions, or just heckle me and tell me I'm wrong on Instagram. I spend a lot of time there. Travis _Baucom, BAUCOM.
Very good. Well, man, thank you for driving up. Congratulations on your success. And I'm going to get in one of those deals eventually when I actually have time to read the text.
That'll work.
But I got to wrap up by saying that, I'm a very busy person. I run multiple companies, and I like the way you raise capital because it's not aggressive. And too many people out there need to understand that if you're too aggressive with an investor, the investor will think you're desperate.
Yep. And
if they think you're desperate, they're definitely not going to give you any money. So I think you're doing a great job. I love following what you do, and wish you the best of success. All right. And thanks, buddy. All right. That's all our time today. Thank you for stopping by. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.